Hello students, how are you all? In last lecture we have discussed some points about bank reconciliation statement. So today I have a question for you and we will discuss this question according to the format of preparation of bank reconciliation. So I'll give you some time first to note this, to copy this question, and then I'll come to discuss about these questions to you. Let me first read these questions. There are altogether 6 adjustments, out of which one is just the balance of cash book. So let me read this adjustments. First, on 31st December 2017, cash book showed a bank balance of $6,000. Second, checks of $5,000 issued, out of which checks of $4,000 were presented for payment. Third, checks worth $1,400 deposited in bank on 20th December but has not been credited by bank. Fourth, a check from David for $400 was deposited in bank on 26th December 2017 but was dishonored, and advice was received on 2nd of January 2018. Fifth, passbook showed bank charges $20 deposited by bank. Sorry, it is debited, not deposited. It is debited by bank. Sixth, direct deposit made by a debtor in bank $500, notice of which was received on 2nd of January 2018. Passbook balance on 31st December was $5,180 on credit side, which is a positive balance. So I'll give you some time, just copy this. I hope you have covered this. Let me rub off this one and we'll discuss each adjustment, and we'll at the end we'll also prepare a bank reconciliation statement. So let's see how bank reconciliation statement works. First of all, on this question, let me discuss these certain points. There was a bank balance as per the passbook. It is $5,180 on 31st December 2018. This is the balance which is shown by bank in its customer account. Credit side is a positive side for the bank balance. And as per the cash book, we have $6,000. This is the book which the entity or organization prepare. And as per the organization or entity, it has bank balance of $6,000 as per its cash book. But the bank shows that it is only $5,180. So there is a mismatch between the cash book which is prepared by the organization and the passbook which is prepared by the bank. So we need to find out what are the reasons behind these differences. We can see there is a difference of $820. If you subtract this one, you can see there is a difference of $820. And we can find the reason between this difference is 2, 3, 4, 5 and 6 adjustment. Let's see how we can reach from cash book balance to passbook balance or from passbook balance to cash book balance. So let me give you a hint. Whenever you are preparing a bank reconciliation statement, you have two choices. Either you start from cash book balance or you start from passbook balance. You cannot start from both of them. So luckily we have both the balance given in this question. Sometimes question only provides either cash book or passbook. In this question we can find the balance of both the books. So we have option, we can start from cash book or passbook. But if the question provide you only the cash book balance, then you should start from cash book balance. You have no other option. And if the question provide you the passbook balance, you have to start from passbook balance. You don't have any other option. So we have a choice, guys. So let me begin with cash book balance. That means the balance which is shown by the entity. And we have to reach to the passbook balance, showing the difference, the reason. Okay. So, okay. I'll explain about this adjustment, each of them one by one. So let's have certain patterns here. A question my mobile. So second number adjustment was checks of 5,000 issued, out of which checks of 4,000 were presented for the payment. See, checks of $5,000 issued and only $4,000 were presented. First, let's go to the meaning of this sentence. Checks of $5,000. That means the organization entity, let's say it is Messrs. XYZ. Organization has issued a check for the payment. Let's say they have to pay installment for a house or a building. Okay, so they have issued checks. There are a number of checks. Installment of house, installment for car, payment for electricity, payment for Wi-Fi, internet. Okay, so there are a number of checks. Why checks are issued? Checks are issued for the payments. Okay, payments means obviously our bank balance is going to decrease. Okay, so what has happened in this adjustment? If check of 5,000 is issued, then immediately the organization will reduce the bank balance in its cash book. So what will happen in cash book? In cash book, the balance will be reduced by $5,000. Okay, And in passbook, unless and until the checks are presented, bank will not reduce the balance because the amount will not be withdrawn by the payee unless and until they present the check to the bank. Okay, so we can find that how much check is presented. Only 4,000 check is presented. $4,000 check is presented. What has happened? We have reduced our cash book balance by $5,000, whereas the bank has only reduced the balance by $4,000. So if we level up, say this is the level of CB and PB when they are showing the correct figure, because balance as per the cash book and balance as per the passbook should be same, because in both the case we are showing our bank balance. This should be same. Suppose they were originally at the same position. Now what happens after this adjustment? After this adjustment, our cash book, we have reduced our cash book by $5,000. Okay? And bank has reduced the balance by $4,000. Now, if we start from cash book balance, we should see where is our passbook. Okay? So, if we see our cash book balance is this and our passbook balance is this, and if we want to go from cash book to passbook, what we need to do? We are $1,000 down than the passbook. That means organization's cash book is $1,000 down than the passbook. Okay? So, in order to go from cash book to passbook balance, if you want to balance, you are here. And if you want to move here, this is minus 5,000, right? If you add $1,000, you'll go to minus 4,000. Correct? If we are minus 5,000, bank is minus 4,000, we have to go, if we start from cash book, we have to go from 5,000 minus to 4,000 minus, and how can it be adjusted? By adding $1,000 to the cash book balance. This is as simple as that. Okay? So the first and foremost way of moving from cash book to passbook is, for adjustment number 2, we have to add $1,000 in our cash book balance. Okay? So, now moving to the next, I hope you understand this, moving to the next adjustment. Next adjustment is check worth $1,400 deposited in bank on 28th December but has not yet been credited by bank. Let me give you a hint. We are preparing bank reconciliation statement in this example for 31st December 2018. So we need to find out the correct figure of our bank balance. But because there are two different books, one prepared by organization and another prepared by bank, we have cash book, it has passbook. We can find the differences in the balance of these two different books. We have already discussed about the reasons why there is difference. What will happen? Certain transactions which are done before 31st December 2017, in this question, this is 17, before 31st December 2017, certain transactions which are done will be executed after 31st 12 2017. Basically, which is based on the informations Maybe certain informations are missing. Maybe certain informations related to these periods come after the end of this period. For example, if the customer has deposited a check to the bank on 29th of December, but we don't know that the customer has already made the payment, so we have not adjusted our cash book, but the bank has already realized the amount. So when we see the passbook, we find that our passbook has increased the amount by the amount paid by the debtor or customer. So the reason is there are certain transactions done before this period, but the information has come later on. So there is always a chance that there can be a difference between cash book and passbook. So while preparing bank reconciliation statement, if this is the book closing date, then we need to find out what are the transactions that has happened before 31st December 2017. And we need to know what are these transactions which are recorded in cash book and what are these transactions which are not recorded in cash book. What are the transactions which are recorded in passbook? What are the transactions which are not recorded in passbook? And just compare them and find the difference between them. Okay? So in adjustment number 2, what has happened? A check of $1,400. We, the organization, entity, has deposited a $1,400 check in the bank. Okay? So immediately what we have done, we have added $1,400 in our book, because in cash book the entry happens then and there when you deposit the check in the bank. Okay, so we have increased the cash book balance by $1,400 on 28th December, but this check has not yet been cleared. That means the passbook is still not moving. Okay, we have increased $1,400, passbook is here. We have increased $1,400, passbook is here. And if we want to go from this to passbook, okay, if we start from cash book, if we want to move from cash book to passbook, how the balance of cash book will come to be equal with the balance of passbook? By decreasing this amount, because this amount is $1,400 more than the balance on passbook. So in this case, what we need to do, if we are adjusting our cash book, we just need to minus $1,400 from cash book, and this will be the passbook balance. I hope you understand this point. Now, moving to the next adjustment. Next adjustment is a check from David, $400, was deposited in bank on 26th December, but was dishonored. Oh my God. And advice was received on 2nd of January 2018. So let's understand this question. First, our customer David makes a payment in check. Okay, David's check, it's $1. How much? 400. We deposit this. When we receive a check, we make an entry. Entry will be in our cash book. Entry will be cash to debit, or say bank to debit. If we deposit the same on the same very same day. Okay, so we have increased our bank balance. This is debit by $400. Now the check is with bank, and bank also wants to increase the balance by $400 if it realizes, but the check is dishonored. But we don't know about it. We don't know about it till 31st December 2017. That's why our cash book balance is $400 more than the passbook balance. So if we start from cash book and if you want to reach the passbook, what you need to do is you need to reduce this increased amount. That means you need to minus 400 in order to reach the passbook balance. This is just the way to show that this is the reason for the difference. Okay? I hope you understand this point. Let's move to the next one. Passbook showed bank charges 20 debited by bank. Bank charges 20 debited by bank. So what has happened? Ordinarily this kind of transactions happens like at the year end or in the month end. What happened? Bank will charge or will debit certain charges. Okay, that means bank will reduce certain amount in the name of bank charges. But the organization does not know about it, or accountant does not know about it. Okay, so in the cash book, the balance is intact. There is no bank charge. But in passbook, bank has, without giving advice or notice to the organization, reduced $20 from the balance. Okay, so what has happened? Cash book balance is here, but passbook balance is here, minus 20. So if you want to move from cash book to passbook, you also have to reduce $20 to reach to passbook balance. So in this adjustment, what you need to do is cash book balance, okay, minus 20. This is passbook balance. Okay. Now, this is the very easy adjustment though. Now, let's move to the next point, the last one. Direct deposit made by, we have already discussed this point, okay? Direct deposit made by the debtor in bank, $500, notice of which was received on 2nd January 2018. So, one of the customer has directly deposited the amount in the bank, but we don't know about it. So, bank has already added $500 in our account, but we don't know. We are here, we don't know. Okay, so if you want to go from cash book balance to passbook balance, what we need to do is we need to add this figure because we have not moved our balance for this adjustment. So add this figure to the cash book and we'll reach to the passbook. So guys, this is how you adjust your cash book in order to reach to the passbook balance. And you can do the reverse of that in order to reach the cash book from the passbook. So this is easy a mathematical concept. So now I'm going to show you one structure which is actually a format for the bank reconciliation. So sorry. So let's do this. Bank reconciliation statement as at 31st December 2017. Okay, there are two approaches for you can note this. There are two approaches for preparing bank reconciliation statement. Either you write positive, negative, or either you add, like say there is one format, like if you start from cash book balance, cash book, add certain item, list certain item. This is passbook balance. Okay, I have just shown you that you have deducted certain items like $1,400 or $400. So also we have added certain amount. So either you do this in this way or you do this by showing actual accounting sides like debit or credit. So you can start debit, credit. We already know if we start from cash book, we have to adjust cash book, and in order to adjust cash book, every positive will be debited, every negative will be credited. Similarly, if we start from the passbook balance, every positive will be credited and every negative will be debited. So there is a reversal fundamental. So if we start from, let's begin with the cash book. I'm writing particular here. Particulars. Number one, balance as per cash book. Because we are starting from cash book, remember, it will have a positive balance. Okay, so positive balance for the cash book is debit. Okay, and the next one was the adjustment for a check for the payment 5,000, out of which 4,000 has been realized by the bank and remaining 1,000 has not yet been realized. So we have already reduced $5,000 in our cash book. Okay, we have already reduced $5,000 in our cash book, but the bank has only reduced $4,000. So in order to reach the bank, what has happened? Check of $1,000 not yet presented. So cash book, passbook. Let me show you. Cash book, passbook. Cash book minus 5,000. Passbook minus 5,000. Passbook minus 4,000. Because we have started from cash book, I have to adjust cash book to reach the passbook. This is minus 5,000 cash book, and I have to reach to the passbook. How can I reach the passbook? Passbook is minus 4,000. This is minus 5,000. If I add 1,000, I'll reach to the passbook. So simply, what I'll do, I'll add 1,000. In order to add on cash book balance, I have to debit this figure because this is cash book balance. Okay, debit 1,000. This is positive. If you start from cash book, every positive is debited, every negative is credited. Okay, the third one, check worth 1,400 deposited in bank but not being credited by the bank. So what has happened? Check of $1,400 not yet credited or realized. Is this what happened? Okay. So 1,400 not yet realized. What has happened? Let me show you. CB, PB. I hope you understand this. Cash book. What I have done? What the entity have done? Entity have already increased $1,400. Okay, because entity does not know what is happening in the bank. As per the entity, $1,400 has been deposited. So entity has made a positive 1,400, but there is no movement in passbook. But we have to start from cash book and we have to reach to passbook. In order to reach to passbook, which is balance here, we have to down $1,400 minus $1,400. So minus $1,400, which is credit 1,400. Okay, the next one. Next one is passbook showed. Sorry, there is another adjustment. Fourth point. A check from David 400 were deposited in the bank on 26th but was dishonored and invoice was received in the next year. Okay, what has happened? Check $400 check dishonored. We didn't know. As per cash book, what we have done is we have increased $400. What has bank done? Bank has not increased any note. We don't know about it. We need to reduce our cash book balance by $400 in order to reach to the passbook balance. So what I'm gonna do is I'm gonna credit 400 because negative means credit. Another five number point. Passbook showed a bank charts. Bank charts. Passbook has reduced the balance. Passbook has reduced the balance. Cashbook has a positive balance. So this is bank charts. Bank charts not adjusted. Okay, not yet adjusted. Cashbook does not know about it. Passbook reduced by 20. So we have to start from cashbook. We'll also reduce 20. So for this, we'll have to credit $20. Last one. Direct deposit made by debtor in bank, but we don't know it. Okay, so direct deposit. What is happening? We don't know. That means cashbook does not know it, but passbook know it. It is $500 above the cashbook for this adjustment. So we need to go $500 above to reach to the passbook balance. Increase. So if you want to increase $500, what do you need to do? You need to debit $500. Let's see we have reached to the passbook balance or not. See. Let's see. Okay. 6,000, 7,000, 7,500 minus 1,820. Okay, so I think there is a mistake in the balance. The balance of passbook should be not 5,180. It is. Let me correct you. Change the question. Actually, it is 5,680. Okay. So if you change this will be the correct one. Because the balance has left this adjustment. If we add this figure as well, which is a direct deposit made by the customer in the bank, we need to add $500 in our cash book in order to reach to the passbook. So the cash balance as per passbook would be 5,680 credit, which is a positive balance for us, and it makes the total of $7,500. So guys, this is all about bank reconciliation statement, where we use the accounting signs debit and credit for calculating the balance. So there are two more things we need to understand. If the balance as per cash book is positive, write 6,000 on the debit side. If balance as per the cash book is negative, which is overdraft balance, write the balance at the credit side. If you are starting from the cash book. Let me repeat. If the balance is positive, then write the balance on the debit side for the cash book. And if the balance is negative, which is overdraft balance, write the balance on the credit side. Okay? And all the fundamentals, all the process is same. Just we'll have to change the sign for the different balance, positive or negative balance. Okay? So far, this is all about the bank reconciliation. We'll have a different topic in next video. Till then, ta-ta, bye-bye.